The real mastermind behind the Trump administration, it isn't Trump. It's a shadowy figure from Wall Street, a man who once helped George Soros break the Bank of England, now stands at the center of global trade realignment, Fed manipulation, and the crypto revolution. And the craziest part? He's not even trying to hide it. Ladies and gentlemen, I'm talking about Scott Bessent, the US Treasury Secretary and the most dangerous financial mind in the White House. This is a man who doesn't just predict market reactions, he designs them. He built a multi-billion-dollar hedge fund empire, and now he's rebuilding the global monetary order. In this video, I'm going to show you how Bessent is quietly building a flywheel of market power, orchestrating tariffs, trade deals, Fed transitions, and even crypto policy, all from the shadows of the Treasury departments. And if you think Trump is in charge, you better think again. Let's start with who is Scott Bessent, really? This isn't just some bureaucrat. This is the man who helped George Soros pull off one of the biggest trades in history.
Now, Bessent really made his name in the early 90s working under George Soros, famously helping Soros break the Bank of England by successfully betting against the British pound. It was a very lucrative trade.
The 1992 short on the British pound that collapsed the Bank of England and made over $1 billion in one day. Back then, Bessent was running Soros Fund Management's London office, and his fingerprints were all over that play. It wasn't just guts, it was financial engineering, a game of macroeconomic pressure, central bank psychology, and precision timing. He's been playing that game ever since. After Soros, Bessent went off to run his own hedge fund, the Key Square Group, with $4.5 billion under management and a $2 billion anchor investment from the man Soros himself. So yeah, when you hear that man is now Treasury Secretary of the United States, you should be asking, what game is Scott Bessent playing now? The ability to exploit macro dislocations that Bessent honed during the pound crisis is now being deployed on a global scale. And just like that, when he broke the Bank of England, he's once again using pressure as a lever to create structural change. In the days following Trump's broad-based tariff announcements, a 10% baseline was applied to nearly every country. The global response seemed chaotic on the surface, but beneath the noise, something far more calculated was happening. As the markets digested the headlines and pundits predicted diplomatic fallout, Scott Bessent was already mobilizing a counter strategy, one that would quietly rewire the US trade system in real time. According to multiple reports, Bessent immediately initiated direct contact with trade officials in the UK, Australia, South Korea, India, and Japan, prioritizing a new round of bilateral agreements designed to rebalance global flows on American terms. While Trump's public message leaned into economic nationalism, Bessent's objective was to transform tariff volatility into strategic leverage. Bessent's private message to financial circles was clear. The administration was not backing off, but it was open to recalibrating, as long as the deals delivered results. In other words, the tariffs were never the end game. They were a tool, an opening move to pull new trade structures into place and to reset expectations around American economic leadership. National Economic Council Director Kevin Hassad's comments reinforce this idea, noting that if strong deals were struck and tariffs were lowered in return, markets could start pricing out the inflation risk tied to protectionism. That shift matters because once inflation expectations begin to retreat, bond yields follow. And if bond yields fall far enough, the Federal Reserve is free to act. Rate cut probabilities rise, equity markets stabilize, risk assets could begin to move higher yet again. And that domino effect starts with Bessent inside the Treasury. Rupert, where are you? And voila, just like that, Rupert is appearing, the actual mastermind behind the Trump administration. Remember guys, whatever happens, you just gotta buy Bitcoin. Okay, just do that. Trump's own public schedule seems to reflect Bessent's pacing. He's been meeting with top officials from Japan and Mexico and publicly signaling that every nation, including China, wants to meet. The trade war has become a negotiation table, and Bessent is quietly the man directing the traffic. To investors watching the headlines for signs of escalation, this may appear erratic, to say the least. But from Bessent's perspective, the global chessboard is finally taking shape. Trade relationships are being recorded in American favor. And each deal, each adjustment, each diplomatic opening becomes another piece in the larger macro strategy. One designed to cool inflation and open trade channels and to position the US at the center of a new global supply chain. Scott Bessent has built his career by understanding where leverage lives and how to apply it when the moment is right. Right now, all roads, they lead to China, but not in the way most policymakers and investors think. The headlines have focused on tariffs, but the deeper risk and the real power dynamic lies in rare earth minerals. These are the critical components that power virtually everything. Smartphones, medical equipment, electric vehicles, missile systems, data centers, and so much more. And China controls over 95% of global refining capacity for rare earths. They've already begun tightening exports, and they haven't shown signs they'll reverse course yet. The United States is 100% dependent on imports for 12 of the 50 most critical minerals, and over 50% reliant for another 28. That's not a trade statistic. It's a strategic vulnerability, and Bessent understands exactly how to use it. But his strategy isn't just reactive, it's expansive. Scott Bessent's grand encirclement plan is a coordinated geopolitical and economic blueprint designed to isolate China and realign the global supply chain map. The centerpiece of the strategy is forging deeper trade ties with nations like Japan, South Korea, Vietnam, India, countries Bessent has described as good military allies, not perfect economic allies. His goal is to transform them into fully aligned economic partners, using the leverage created by Trump's tariffs to secure trade agreements that reduce barriers, block transshipment of Chinese goods, and reposition these economies more firmly under the US trade umbrella. The idea is to create a unified economic front, one capable of pressuring China, weakening its dominance over global trade routes, and accelerating the reorientation of supply chains away from Beijing. As China applies pressure through export restrictions, Bessent is reshaping the regional response. While Trump continues his public tariff narrative, Bessent has begun publicly signaling that the current tariff regime is unsustainable and that progress with China is not only possible, but it's already underway.
Look, it'll come from the top. President Trump, Chairman Xi have a very good relationship. And I wouldn't say that these are not a joke. I mean, these are big numbers. I think no one thinks they're sustainable wants them to remain here, but it's far from a joke.
Well, they just say that the rate is so high, it's become a joke. Basically, does it just stop trade between Washington and Beijing altogether? Do you see a decoupling of these two economies?
Well, maybe the trade minister has a different sense of humor I do, but I don't see anything funny about it.
Do you see a decoupling, though, between Washington and Beijing?
There doesn't have to be. Like, there could be. There's a big deal to be done at some point.
Analysts have begun to pick up on the pattern. The tone, it's changing. Sentiments from the White House and Treasury are starting to converge around the idea of a negotiated resolution. Trump is dropping hints that deal is coming, and the market is responding accordingly, pricing in the end to the standoff and beginning to anticipated relief. Bessent has shifted from diplomacy in the traditional sense to pressure and release macro strategies, raise the stakes tighten the system, then time the de-escalation to extract maximum advantage. While the Federal Reserve warns of prolonged inflation and policy dilemmas, Bessent is already setting expectations for stability and laying the groundwork for a broader economic reset. Each move in this game is sequenced: restrict exports, signal progress, manage volatility, engineer relief. Bessent is playing the macro playbook at a geopolitical level, and China isn't the only audience. Investors, central banks, capital allocators, they're all watching, waiting to follow the signal. From the outside, it may look like an unsteady process, but inside the system, the pieces are moving according to design. And as the pressure with China peaks, Bessent is preparing to shift from confrontation to control. As global pressure intensified and Trump's 10% tariff policy began drawing fire from allies and markets alike, a quiet but consequential shift was taking place inside the White House. And it didn't play out in a debate stage or in front of the cameras. It happened behind closed doors at Trump's house in Mar-a-Lago. Following Liberation Day and just days before the now infamous 90-day tariff pause, Scott Bessent boarded a plane to Florida for a face-to-face meeting with Trump. The message he delivered was direct: slow down the escalation, soften the optics, and open the door to deals. In the days that followed, the president's tone shifted and the policy followed suit. By midweek, the administration announced a sweeping pause on tariffs for most of the world. And while the headlines credited Trump with changing course, those inside the administration knew exactly where the new direction originated. And now you do too. White House officials later confirmed that Bessent had been advocating for lower tariffs even before the decision, and his visit only reinforced the urgency of recalibration. This wasn't just a tactical pivot. It was a signal of rising influence within the trade team. The balance of power had shifted. For months, Trump's more aggressive voices, Peter Navarro, the ideological trade hawk, and Howard Lutnick, the Wall Street operator turned Commerce Secretary, had been shaping the administration's posture. But by the time the 90-day pause was announced, both were losing ground. Bessent, on the other hand, was increasingly seen by staff and markets alike as the adult in the room. His advice wasn't just more palatable politically, it was also more grounded in financial strategy. While others pushed tariffs as ideology, Bessent treated them like instruments of leverage, calibrated to provoke response and then redirect toward deal-making. The market noticed. The tariff pause led to a softening in bond yields, a reduction in implied volatility, and an improvement in risk sentiment. Investors didn't necessarily trust that Trump had changed, but they were reassured to learn that he was now listening to Bessent. This wasn't a power grab. It was an elevation, earned not through politics, but through precision. In a room full of ideological operators, Bessent brought a hedge fund strategist toolkit, one that fused policy timing with market response and international reaction. For those tracking Trump's shifting inner circle, the message was clear. Navarro's zero-sum playbook had run its course. Lutnick's influence was waning. And Bessent, the one who once broke the pound and advised Soros, was now charting U.S. economic strategy from inside the Treasury with Trump's ear at arm's reach. As the economic fallout from tariffs begins to ripple through markets, all eyes are naturally turning to the Federal Reserve. But while the Fed Chair Jerome Powell delivers carefully hedged statements about inflation risks and policy uncertainty, it is Scott Bessent who is quietly preparing the next major pivot. And he's doing it from within the White House. Just days after Trump's tariff escalation triggered market volatility, Powell addressed the Economic Club of Chicago with a tone that could only be described as cautious to the point of paralysis. He admitted that tariffs may exert a more persistent inflationary impact than previously expected. Even as he stopped short of committing to any decisive action, His repeated refrain of "it's too soon to say" has started to wear thin for investors who are watching inflation expectations remain elevated and recession risks tick higher. The markets didn't like what they heard. Bitcoin dropped by over 1.5% and the S&P fell nearly 2% midday. And bond markets began pricing in a higher probability that the Fed was falling behind the curve. Investors are increasingly concerned that Powell is locked into a reactive posture at precisely the moment when proactive strategy is needed. Well, Bessent, my friends, he sees that as weakness, and he's already moving to fill the gap. Reports confirm that Trump's administration is actively discussing Powell's replacement, with Bessent not only involved, but leading the vetting process. Interviews for a new Fed chair are expected to begin this fall, well before Powell's term ends next year. Trump never one to mask his intentions, made his position clear by declaring on Truth Social that Powell's termination cannot come fast enough. While Powell hesitates, Bessent is assembling the next phase of monetary policy himself. He's not waiting for the Fed to act. In multiple interviews and internal briefings, Bessent has floated the idea of reviving large-scale Treasury buybacks to inject liquidity into the markets. When asked directly whether this amounted to another round of quantitative easing, Bessent offered a characteristically measured response. Sure, all options are on the table. This is good for our bags. The message is clear. Even without the formal authority of the Federal Reserve, Bessent is preparing to mobilize the US Treasury's vast toolkit in case conditions deteriorate any further. He's already signaling confidence in a market rebound, telling investors he believes volatility has peaked and emphasizing there's no evidence of dumping US Treasuries. None of this should read as improvisation. It is a carefully staged sequence of signals designed to anchor market expectations, create policy optionality, and establish credibility for what comes next. While Powell and the Fed remain fixated on their dual mandate, Bessent is building something broader, a full-spectrum financial strategy that blends fiscal tools, monetary guidance, and global trade, positioning into a unified plan for economic control. He doesn't need to force the Fed's hand. He's setting the conditions under which they have no choice but to follow. While most of the political and financial world remains fixated on interest rates, tariffs, and inflation forecasts, Scott Bessent is thinking about something much, much bigger: the structure of money itself. And while that conversation might seem distant from the day-to-day grind of trade policy and bond markets, it's precisely where Bessent's long game is beginning to take shape. The signs are already there for anyone paying attention. In 2024, stablecoins surpassed Visa in total transaction volume for the first time in history, marking a turning point that most mainstream economists have barely acknowledged. The significance of this milestone cannot be overstated. What began as a niche innovation in the crypto ecosystem is now emerging as a viable global payment infrastructure that rivals, and in some cases, exceeds traditional finance. Bessent understands this shift better than most, not because of ideology or politics, but because of how he sees systems evolve. His background as a macro hedge fund strategist taught him that the architecture of global finance is always in motion, and that those who anticipate structural change can position themselves early, often years before the mainstream catches up. Within the Treasury, Bessent has already floated the idea of a strategic Bitcoin reserve, aligning with his broader moves toward deregulation and institutional acceptance of digital assets. He's quietly working to integrate the crypto sector into national economic policy. Recent comments suggest that his approach includes aligning tax incentives and regulatory clarity to encourage capital to flow into blockchain-native markets at scale. At the same time, the US dollar has had its worst start of the year since 1995, leading many analysts to wonder whether Bessent is deliberately engineering a softer dollar to boost competitiveness, rebalance capital flows, and lay the groundwork for the next phase of monetary flexibility. Bessent has acknowledged publicly that the dollar remains structurally strong, but his refusal to intervene, paired with the suggestion that the VIX has peaked, reveals a strategy that prioritizes resilience over short-term optics. Rather than propping up traditional asset classes with reactive stimulus, he appears to be guiding the economy into a new configuration that can better absorb volatility through tax cuts, deregulation, and crypto-native innovation. What emerges from all of this is a vision not for crisis management, but for monetary redesign. Bessent won't attempt to preserve the old system indefinitely. He's laying the tracks for something new, one where stablecoins and digital reserves complement or even replace elements of legacy monetary architecture. His policies don't just create space for these systems to grow, they prepare the US economy to lead in that transformation. Viewed through this lens, stablecoins outpacing Visa was not a surprise. It was a signal, and Bessent, perhaps more than any public figure today, has built his career around spotting those signals early and turning them into strategies that move markets and reshape institutions. So when the media tells you Trump's lashing out, when markets get spooked by tariffs or China, or when Powell starts sweating under the lights, just remember, none of this is random. It's a game. And the man setting the pieces in motion is Scott Bessent. From breaking the Bank of England to rebuilding the American empire, he's always known how markets react because he's the one who designed them. Let me know in the comments, ladies and gentlemen, what you think is Bessent's next move, because if you're seeing it play out now, chances are he's already 3 moves ahead. If you guys found this video valuable, do me a favor and hit that like button. Share the video with a loved one, somebody you think would find this valuable. Subscribe to the channel if you're not already. My name is Chasse. And until next time, folks, stay sharp, stack sats. I'll see you later.